Good evening, guys. It's Saturday, February 24th. My name is Dave Coker, and this is Talking About Finance. And okay, here we go. It's another awesome night talking about the one way, the only way, the way everyone should, and the way everyone wants to invest, to build wealth, to get rich. But the problem is most people don't do this. Instead, they listen to influencers who suggest they invest in stock market indexes, or they invest in some single stock the finfluencer suggested. Now, there are lots of problems with either of these approaches, but the common issue with each is they don't generate cash flow. So when you want to get paid, you got to sell shares. And that is the problem. If there's a bear market, perhaps a bear market for an extended period of time, you're selling assets potentially at a loss. But for how long? Those new to the markets display their ignorance, pointing back just a few years and mindlessly repeating, stocks always go up. Well, they don't realize there were periods of time in the United States when stocks dropped for maybe 8 years. There were periods of time in the United States when stocks traded sideways for 12 years. No increase, no decrease, no change in price. But in either case, you're selling stocks. Your assets. That's hardly a way to get rich. So you gotta wonder why people take this bad advice. Well, yes indeed, stocks have traded up the past few years. A large number of retail investors have never seen a bear market at all, let alone a real bone grinder of a correction that just seems to go on and on and on. I've been investing and talking about dividend-paying stocks for well over 20 years. And it seems when we have a bad period like I just described in the markets, I get lots more questions about buying cash flow from people who before only bought stocks. Big difference. They realize the fallacy of simply buying stocks. But let's move quickly on and talk about finance. The S&P 500 finished up for the week about 1.66%. 4 sectors outperformed the index, and staples was the top dog. 7 sectors underperformed the S&P 500, but all posted gains, with energy coming in last. Still, it was a respectable 46 basis points week on week. The VIX traded down on the week to 13.75. It started the week at 13.85. The 10-year note closed the week at 4.25%, flat on the week and up 0.4% year to date. Oil closed the week at 76.55, down about 2.4% on the week and up about 6.8% year to date. Yesterday was Friday, so of course I bought Bitcoin. I still haven't pushed any capital into a Bitcoin ETF, but I've been looking them over, and I've got ample capital in my retirement account, so I just might take the plunge. Perhaps nothing large, more just to show team spirit, if you know what I mean. Anyway, let's take a look at what me and my buddies, some 50 or so finance professionals from all around the planet, talked about last week. And let me introduce us. We are Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everyone, absolutely everyone in global finance. And this week we're reporting from the City of London. We're reporting from Wall Street. We're reporting from Salt Lake City. We're reporting from Miami. And we've got a new correspondent reporting from Lisboa. I used to live down there, lovely town. We have people everywhere, absolutely everywhere that matters. So let's go. 7 slides for 7 days. We all gonna make some money. Whoo yeah! All right, first up, we got this. It's an interesting comment. We were talking about it on the group. Yeah, you know, the numbers for the U.S. economy, the top numbers look pretty good. But when you start to dig beneath the hood, the things are looking very touchy. In particular, the national debt and the deficit. It's going to cause some trouble down the road. And people are joking about how, you know, Taylor Swift comes to a town and she injects $1 billion or something crazy like that into the local economy. And now we've got NVIDIA with another, you know, $2 trillion market cap stock. I'll be talking about NVIDIA in one of my articles I'll be writing. Lots of interesting stuff going on with the accounting there, but we'll leave it to the side for now, and we'll sort of just see what goes on otherwise. Here's an interesting one, and people are starting to realize that there's a problem. You know, you get paid and you're living frugal, good on you. You got some excess capital, excess earnings, so you put them in your savings account. But unfortunately, when we start to look at real rates of return, yeah, you're actually losing money by holding your cash in a savings account. It's the difference between real and nominal. And if that doesn't mean anything to you, check out some of my articles I've written, and you can find them all over Google News. But long story short, nominal is stated, real is inflation adjusted. And yeah, it's a little difficult sometimes to find a bank account that in real terms outstrips inflation. It's getting easier now that inflation allegedly has dropped down to 3.1%. But on the other hand, when it was 9% or so, you were not finding a bank account that returned money to you that way. It's really interesting. Now, I do like to watch what institutional money is doing, and this is really fascinating. Elliott Management is just the most recent installment. I've tracked about 6 of these big, high-profile investment conglomerates, to use that phrase, and they're moving money. Elliott's going into mining lots of different stuff. It's very fascinating. But aside from that, they're moving capital into what I always call tangible, real, physical assets. And that's telling if you get the so-called smart money, moving money out of stocks, and we know they're selling stocks, moving money into tangible, real, physical assets. And in fact, we can see globally, and I have written several articles about this, we can see globally that lots of money is moving into gold. Lots of central bank money is moving into gold. Double-edged sword there. Why? A lot of them are getting a little nervous about relying so much on the dollar. They've got roughly 20% of their assets, central bank assets globally, held in dollars now. Just for historical reference, if you go back, I believe it was 30 years ago, we were talking roughly 80%. So they have unloaded a lot of dollars, and it looks like they're starting another wave. And they're moving out of dollars into gold. Really, really interesting when you think about the motivation there. And more importantly, think about the impact of central bank capital moving into gold. A resource that conceptually is infinite. They always seem to discover new mines, but there are delays in extraction. You just can't extract gold as rapidly as you'd like, and that will manifest if demand spikes. That will manifest, of course, in increased prices, and then you'll see all sorts of stuff going on. If we look at the bubble or the run-up we had back after the global financial crisis, we saw when the prices of gold and silver started tracking towards new highs, we saw a whole big scramble as firms sought to expand mines, establish new mines, reactivate dormant mines they had shut down before. Lots of different things they can do, but that takes time. There's a lag there, and I made out pretty well back with that run-up in metals. And I think I've mentioned this before. I've got 71% of my retirement capital presently in gold and silver, and I'm looking to do another good deal like that. And we know a lot of funds are actually, no matter what their USP, no matter what they claim to specialize in, we know a lot of hedge funds are moving money into gold. It's really fascinating looking at all these disparate parties moving money into gold. It's a really interesting time to be long the metal. But, we do have to keep in mind the better things in life. Right? And one of my buddies put this in the channel. This is from the Bitcoin Therapist, I believe. Wojak Bitcoin. I'm so sorry about that. You can see his watermark there. And one of my buddies put this in the channel, guy I know, and yeah, he's getting this. He made the mistake of letting his significant other realize how much Bitcoin he had. I don't talk about how much Bitcoin I have. I just mentioned I've been buying it regularly for a long period of time. Doesn't mean I buy one Bitcoin at a time or even a tenth of a Bitcoin or 1/100th of a Bitcoin. Now, use your own imagination. But yeah, this poor gentleman did make a mistake, and it's I guess he's getting I don't know how. Well, we'll have to talk to him. I'm not sure exactly what's going on, but he did say this is what he's being subjected to at home. So I don't know. Why sell Bitcoin? It seems like the best is yet to come. Now that the ETFs are online, lots of capital flowing into the ETFs, the exchange traded funds, lots of new interest in Bitcoin among retail who can buy it much, much easier than they could during the last run up, the last all-time high. And so I think, as I mentioned, the best is yet to come. I don't think you should be selling now. Different story, maybe in 2 years, 3 years, 5 years, depending on how the price evolves, but a little bit different. Now, PlanB, and I've got a lot of time for this guy. PlanB did a tweet. Follow him on Twitter. He's a good guy. And he did a tweet where he says he suggests that we will never see Bitcoin less than 40,000 again. It's difficult to believe, it were his exact words, that we'll ever see Bitcoin less than 40,000. And just about 2 months ago, I believe it was, he had said the same thing for the 38,000 price point. Now, this is really interesting stuff to look at, what his stock to flow model is forecasting and what is actually happening with the price of Bitcoin, denoted with the red line with the dots there. So pay attention to him, read his work, learn about his methodology. It can be applied to other commodities. And it's interesting to see it applied to Bitcoin. And more interesting is it's fairly accurate. You can look at the model, the forecasted price and stuff here in other charts he's done. So, all right, that's it for this evening, guys. Once again, I hope you have a fantastic weekend. Hit the clubs, hit the pubs. You know what to do. And next week, you're going to make some money. Lots of money. That's it, guys. Take care.